Welcome back. This is the Alchemist Nation podcast. My name is Walter Morello, and I get to travel all across the country talking to some of the best real estate investors in the world. Today, I'm hanging out with Steeve Breton, who's not just a phenomenal real estate investor and syndicator. He's also a close friend to Darina and has actually been a coach and a mentor to her through her process. Steeve, it's an honor to be able to hang out with you today. How's everything going on your end?
Walter, I'm thrilled to be here, and everything is great as usual.
Awesome. So it looks like you're in your man cave right now, or is that one of your awesome virtual backgrounds?
It's a virtual background. It's my basement is finished. It does look something like this, but this is way nicer.
So this is almost your vision board. This is you
Yeah,
looking into the
exactly.
future.
That's my next man cave.
I like it. So Steeve, before we dive into your syndications and the thousands of units that you've acquired and all the big deals you've been doing, because, and I know you do some big deals, right? You were part of the multifamily network in Boston that Darina and Matt Picheny run.
Yep.
And we were listening to the $105 million worth of real estate that was purchased. And between you and Matt, you guys made up basically all of that money. And then you had like little guys like me with like, yeah, we did 3 million, like little
Right.
stuff.
Yeah.
Surrounded in monster deals, like monster deals. And these are like, some of them, I think your 75 unit was like a small little chip at what you had done throughout the rest of the year, right?
Yeah. I mean, when you syndicate, the numbers get big really quickly. And you do have to be careful. I always qualify things, or I try to, where I say, yeah, I own a 130 unit property in San Antonio, but we divide that up with all of our investors. How many units of that do I really own? It's like a dozen, right? But once you've got, 10, 12 of those properties, and some of them are 200 units, some of them you have more ownership or less ownership depending on that partnership. But it's not that I outright own, 1,300 units. That's just not how it works.
And I like that you qualify it, because there's a lot of investors who don't take the time to do that math and go say, yeah, like they know it inside, but they're not saying it. So I like that you qualify and you put that piece out there.
Mm-hmm.
So before we dive into more about syndication and more about how you got to where you're at, I kind of want to start at the beginning. Where did you decide real estate was the right thing to do? And what made you start with, you're talking about a coach who made you go into 100 units. What made you say, yeah, I want that coach? What was that decision?
Right.
And how'd you get started in the first place in real estate? What'd you do previously?
Yeah. So I guess the quick story is, I was an IT and finance guy, had my MBA, was like climbing that corporate ladder, working in corporate America for 25 years. About 20 years in, my company got bought out. I had to lay off people. Then I thought I was going to be laid off. I was and also I was wiped out in 2008 as far as my 401k and all that stuff with the crisis there, financial crisis. So those things started just getting me thinking more and more. So by like 2012, I was buying duplexes, small properties here in Boston. I stopped putting money into my 401k because I wanted to be able to retire at some point. And I figured if I buy, a dozen properties over the next 10 years, maybe I can actually retire on time. I never thought in a million years I would be retiring early. So yeah, I started buying locally, and then I realized being a landlord, when I got to about 16, 17 units or something like that, trying to, drive into Boston, which is an hour commute each way, being a landlord, having my 3 children that I was coaching their soccer and hockey teams, it was just too much. So I stopped buying. I was like, okay, I'm stable as is. I'm going to manage these properties. And then I started to invest in passive syndicated deals. And I was able to put, sort of all of my savings, all of my additional income, I just plowed it all in there. And a few years later, I realized, this is far better than the properties that I actually own and self-manage. It's hard to really make great profits in Boston unless you're self-managing. But having a job, you can't really do it all. So I started to sell those properties off, put the money into syndications there as well, generating enough passive income that I could leave my job. In 2019 or early 2019, I left. So it's coming up on 2 years now. And 2017, I started the business, which is basically buying larger properties in the South. So Texas, Florida, Georgia, where the cash flows are a little bit better, or a lot better. And and the reason I did that was I had a lot of friends and family who wanted to invest with me. but it didn't make sense for me to bring them into a duplex or a triplex here in Boston. I just didn't need their help in those properties. And so I wanted to go buy properties where the cash flow was better. There was more to share with my investor friends, and the properties were a bit larger. But as soon as I started doing that, I freaked out. I was like, I know real estate, but I don't know about taking other people's investments in and putting their money to work and being responsible for that. And I have to make sure I do this perfectly. And I also realized that you have to have larger properties, 50, 100 units, for that model to really work well. So that's when I went and got the coach, because I wanted to make sure I was doing it right, and I needed somebody looking over my shoulder and giving me the courage and the conviction to move forward on these larger deals.
I like that. So you actually, unlike a lot of real estate investors who just get into it, you actually are kind of ethical already going forward, saying like your first thought was, look, I'm raising capital. I never want to have that bad conversation with somebody. And in fact, I want to be professional about this. I want to be able to give good conversations. So it's like 2 steps away from the first person just coming into real estate saying, I just want to buy houses with no money down. Like you
Yeah.
came a long way in your journey. How did you find that first coach?
So just on the journey part, a lot of that has to do with where people are coming from as well, right? So I was already, 25 years into a career. I've built a whole life, got the kids in high school, a couple of middle school, whatever. I just been further along in terms of just business in general. I also felt like I had too much to lose. And a big factor was my investors were going to be my friends and family, very close friends and family. And I wanted to avoid those awkward Thanksgiving dinners. So it had to go perfectly. Otherwise, I wasn't going to do it. So
I love that you said it was your friends and family, right? So yes, establishment, it's, being mature, financially mature, or being established helps to raise capital. And I've always said that in my courses, the Get the Money course, I say, look, you got to promise to be moral, ethical, and legal, because this is other people's money. If you haven't done a deal with your own cash yet, you don't belong doing a deal with somebody else's money. It's just, so I like that you added that. And then family and friends are who we raise capital from. Like they're not, our family doesn't have to be rich. You just have to find rich friends or people who've established themselves.
Sure.
And that you can change.
Yeah. And you never know who's who, right? It could be somebody driving an old beat up pickup truck, you're one of your friends. And next thing you know, the guy owns a bunch of property and he's selling them off because he wants to do more passive investing like I did. So things just happen once you start putting that word out there of what you're doing. So it's not always easy with friends and family. I know a lot of people who prefer to avoid it, but if you do it right, it's a gold mine, and people do trust, and it actually feels really good. One of the things I like best about this business is that I have friends and family that are now thrilled with their investments. They've diversified their portfolios, some of it out of the stock market. And they just feel like it's a bit more stable, and then there's the tax advantages and all the other things. So making that available and accessible to people that I care about is really important to me.
And having somebody like you who's done the math, who's gone and taken a look at the property, who has trained themselves well over the years, it obviously makes it more comfortable for them. They know who you are. They see your stable track record, and they say, you know what, Steve's making money. He's been doing it for a long time. I trust him. I trust what he's been doing. Even with your previous careers, you came into this business with a level of trust. You came into this business with a level of, you're known for doing what you say you're going to do. So your reputation, even in a small way, had a huge effect, probably, didn't it, when you started raising capital?
Yeah. Again, that history, that background for everybody is different. I was just super fortunate that I was working in big corporations in the finance space, in biotech. So I was surrounded by people, that were above me in the organization that had a lot of money. And I was managing these huge IT projects. I was really managing the finance side of things. So they saw me as somebody who's responsible with finances, who's only making good investments in projects that are going to have a return, et cetera, et cetera. So those things immediately applied to, when I said I did real estate and I was actually leaving my job to go do real estate, they're like, wait a second, this guy's, he's ethical. He's good with his word. He can manage projects. He's takes care of the finances, and now he's going to apply it to real estate. And they just jumped on board. Because there's a lot of people out there who want to invest in real estate. They're just scared to do it themselves.
Yeah. I recently read a book that was written called The Doctor's Guide to Real Estate Investing for Busy Professionals, and I
Yeah.
thought it was clever. Like, and it wasn't written by a syndicate. Like, this is just somebody who was actually a doctor who thought this would be a good book.
Hmm.
The book I would write to raise capital, to be honest.
Right. No, that's it exactly. And it's not that you have to come from that sort of background. You can build that trust. You can partner with people who have more experience. And I even did that on my first deal, the 130 in units in San Antonio. That was with an experienced operator. So even though I had some experience with real estate locally, my largest property was 6 units where I did a gut rehab on it. That was good, but it wasn't 100 units or 130 units. And it wasn't out of state. So
Right.
for me to learn those additional pieces and again bring friends and family in with me, I wanted to do that with somebody who was already experienced, who lived in that market, who knew every street, who knew the neighborhoods, who also managed larger properties in the past. So that's how I really cut my teeth and learned the process.
Steve, what made you go from it was 15 units to 130 units? And yeah, you brought partners in, so technically the unit count was a little bit lower. But what made you go from a building, like a portfolio that you could manage, you could see,
Mhm.
to a portfolio that you couldn't see? It was 10 times bigger than what you already owned, and you were bringing in partners. So three barriers to entry here.
Yeah, there was so many things. One of the things is time freedom. So, if I keep growing the portfolio here locally and self-managing them, I'm not going to have the time that I want to have. Sure, I'm going to have more financial freedom. I can leave the job and have all this passive or not really passive income because you're working at it. But I can have that income. Uh, what I realize is with syndications, it can be a bit more passive and I'm able to do the things that I normally did in my job, right? Managing projects, you can do that from anywhere. Managing the finances, I can talk to the CPAs, the attorneys. I can do all of that work from my desk here in Boston and let the person that I'm managing or partnering with actually do the management. So they do what they do best in their local market, finding deals, managing the properties, and I'm doing what I do best, which is managing my partners, managing the projects, managing the finances and investor relations.
I like that. You found what you do best and you hired out somebody who does it the opposite, the weaknesses, what they do best and what they
Mhm.
probably love doing. So
Right
Steve,
on.
where are you at right now with your career? Where would you say you're at? I guess how many units are you currently managing and what are you working on? What do you spend most of your time in day to day?
So I've got about 1,300 units that I'm, in the business that I'm managing with my partners, and so that's across to 10 properties, and we just sold one last year as well. But what I'm doing day to day is, number one, keeping an eye on those properties, right? So the investors are expecting a certain return. We had our projections when they invested in those deals. We have to make sure that those things are going off, without a hitch, especially in this past year with COVID and vacancies and all the things that happened. So that went pretty well. We managed it well. My partners were fantastic. But that's, number one all the time. And then number two, it's just always looking to be selective about what it is that we're going to purchase next. So we want to be opportunistic. When something comes up, if it's a really good deal, we're going to jump on it. But we've been more selective now than ever because of the economic outlook for 2021. Some people say it's going to be great. We're going to rebound. It's going to be the roaring 20s. I don't know yet. I think it's going to be a little slower than that. But the prices on a lot of the properties right now are priced for perfection. They're priced for the roaring 20s. And I don't want to buy into that. So, and it doesn't help that last year we bought 2 properties at a pretty good discount. So it's really hard to look at that and then look at the properties that are for sale now and justify paying what people are asking. So I know the good deals are out there. We'll find something, but we're just taking it easy and managing what we have.
Steve, I like that. What you just said is so true, right? Investors who have had good deals know what they're like. And so your appetite's just not there for something that doesn't have a lot of meat on the bone.
Right.
And we're the same thing. I told our investors, we've never done a big purchase like this. We're going after 150 units in 2021. And I told them,
Great.
look, if I nail it in the beginning of the year, I nail it at the end of the year, it's fine. I'm okay
Yeah.
with it. It's just got to be a good deal. Like we've always bought on the smaller stuff. And Steve, you, Matt, like hanging out with you guys has really made me feel comfortable with the concept of syndication. And I think I'm doing it for a lot of the same reasons. So
Mhm.
you're giving back, and you've given back to Darina so long. What do you think instills that desire to mentor people? Like, where do you think that comes from in you?
Um, yeah, I don't know. I've always been a coach, so coaching my kids' soccer teams and hockey teams and all that stuff. I really enjoy that. You can call it giving back, I guess. I love helping people out and helping these kids become adults and being a role model for behavior on the field and with your teammates and all that sort of thing. So that has always been a big part of what I did. But then when my kids went to high school and that part of my life was over, and I had already gotten into real estate. What happened was actually the coach that I had hired, or the mentorship program I joined, they asked me to coach for them. And so, I wasn't sure about that. And, I guess I wasn't confident enough because I had already only done a couple of deals. But I started mentoring for that group. And then that turned into mentoring, on my own. And I don't know, I really enjoy just talking about different deals and different structures and helping people to achieve their dreams. And
That's awesome.
quite honestly, I probably get more out of it than they do.
Yeah.
It doesn't, sometimes I'm pinching myself. I'm like, why am I getting paid for this conversation? Like, I'm getting so much out of this. And a lot of it is, I'll just see, like, there's fix and flippers who want to go and do multifamily, for example. They approach things so differently than I approach things coming from that corporate life that I had. And I learn a ton from them and they learn from me. And it ends up being a great partnership. Sometimes we actually partner on deals together as well.
I love that. So it's in this, you're talking about one of the secrets to teaching that most people don't recognize or don't know about. Maybe they've heard it, but they don't remember it. It's you teach so you can learn more, right? So you learn something,
Mhm.
you do it, and then you teach it. And when you teach it, you get understanding. You get full understanding of what you're actually doing, and it
Yeah.
improves you that much better to the next level. So Steve, if somebody wanted to learn more about your coaching, what was the easiest contact information that you have for them?
The best thing you can do is just jump on my website. So it's Velocity Cap, short for velocitycapital.com.
Awesome. Velocitycap.com. And Steve, where are you going? I know you know the format of this call, so I'm getting close to that final question. But uh, where are you going in 2021? Where do you see yourself, your company going? Maybe 2021, 2023.
Right.
How far out do you look, and where do you see yourself taking the company?
That's funny. I just had so I'm part of a couple of mastermind groups. And in those groups, we'll be in those calls and we're talking about, what are your plans for 2021? And people have massive, enormous plans. And I'm like, yeah, I want to take down another property or two. And like you, it doesn't matter if it's early in the year or it's late in the year. Whenever I say a goal, I always append the goal with in the right way at the right time. So it doesn't, I'm not going to be disappointed even if it doesn't happen in 2021. Maybe I've set all the pieces in place for it to happen early 2022, and that's fine. Right? I'm not going to do a bad deal just because I committed to getting 100 units bought this year or something like that. Um,
100%.
so yeah, everyone's got these giant dreams and goals and things, and I'm like, life's pretty good right now. I'm going to manage what I have, and hopefully I find another deal that's just totally kick butt, and I'll do it. If I can find that deal. But yeah, things are really good right now, and just want to kind of manage the business and make sure we got all of our processes in place so that as we grow further, that continues to be very smooth for me.
I like that. And Adam Triple Adam said the same thing when I interviewed him. He said, "Look, if I can't find anything, I'm not gonna just jump into a deal. I'm not making money just from setting these deals up. I want to make sure they're good deals, they're the right
Right.
deals for the investors." And sounds like you've got the same idea. In fact, I actually had it on my wall for years. It says, "Always do the right thing the right way at the right time."
Oh, that's
And
funny.
it was
Yeah.
just like anything you'd think about or look around, like that was the first thing I'd see on my wall. And like, that was such an easy guiding force.
Hmm.
And you evaluate your deals that way. I love
Yeah.
that.
Everything. Right. Everything has to be that way. Otherwise, you're forcing it, and nothing good happens when you force things.
Absolutely. Awesome. Steve. So it's about that time. I got to go back to 20-year-old Steve. And if you could go back, time travel, and give yourself that advice, or you got kids who are starting to get around that age, what kind of advice do you give your children so that they can get to the place that you are faster, enjoying what you do, being good at it, and making good money while having an impact. What would you say to a 20-year-old person looking to get into this business?
Whew. I mean, there's so much. Some of it, I guess I'll start on the mindset side of things. So it's to practice gratitude every day. So because if you're always thinking about what you want and you're not grateful for what you already have, it makes the path that much more difficult. Um, whether you're religious or not religious, you can say God or the world will give you whatever you ask for, but you've got to be grateful for what you have. Otherwise, you're not getting any more. So
Absolutely.
have that gratitude is super important. And then visualize what it is that you want, maybe on a daily basis. Think about it, actually see it, and then put in the plans, the action items to actually achieve it. It's not enough just to say, I'm going to visualize it or I'm going to manifest it. You actually have to do the work to get it done. And that's super important with my kids now. They're, I've got 16, 18, and 21.
Oh yeah.
So, they have to do the work. And then, the last piece from a financial perspective, real estate perspective, is don't grow your lifestyle with your income, right? Keep your expenses low, save as much as you can so you can buy that real estate sooner. Everybody who does real estate wishes they started a lot earlier. So they've got the ability to do it a hell of a lot sooner than I did.
Absolutely. Steeve Breton, phenomenal interview. This is, I'm starting to get used to when I talk to extremely successful people, I'm starting to get used to the advice be very heavy mindset and the conversation be more about quality of life and doing things the right way.
Mm-hmm.
And when I'm talking to people who are still like, earning and struggling and looking like really just focused on money, I find the conversation totally different, and it's not so heavy on mindset. But they're working a lot of hours, and you're getting the same results.
Right.
But
Well, I'll tell you, I was working like crazy, right? When I had my W-2 job and I was working 60 hours a week and I had to commute, I didn't waste a single second. I was on phone calls during that commute. I was listening to podcasts. I was getting my real estate MBA while I was in the car, right? And the coaching calls, I scheduled them while I was in the car. So I wasn't wasting any time. Come home a little time with the family. When they went to bed, I would work another couple of hours on my real estate side. So I did that grind for a couple of years as well. And, I'll tell everybody who's listening, it is absolutely worth it. But you still, again, got to have that gratitude. You got to find that balance in life, and don't force it, right? It's okay to work hard, but it can't be everything.
I absolutely love that. And you're right. The commute should be utilized. You should be reading audiobooks. You can get your coaches. You can make calls to sellers. Like there's things you can do in that time that feels wasted so that you can still spend your time with your family when you get home. And then at night, you can lose an hour or two building lists and getting knowledge so that you can still spend time with your family. Such a phenomenal interview. Thank you so much, Steve. Again, if you're interested in learning more about Steeve Breton, you can go to velocitycap.com. And if you want to join us on some of our events we do every Saturday for free, the 52 Weeks to Wealth, you go to gualteramarillo.com, find all of the free resources or access to our events. Also, we've got a really cool event coming up. My book, Get the Deal, is coming out on January 21st. So please go and purchase it and hang out with us and learn how to get the deal. It's all about prospecting and finding real estate. I was hoping to make this book about 150 pages. It turned into 260 pages, and it is super detailed, a ton of information. I go into mindset like Steve was talking about. And one other ask, in fact, this ask is for right now. Go to Alchemist Nation podcast on iTunes and write a review, write a positive review, because people like to listen to things that other people like to listen to. With that being said, Steeve Breton, you are an alchemist. You have the abundant mindset. You're looking to give back and teach other people. Cheers to your success, my friend. Thank you.
Thanks, Walter. My pleasure.
Absolutely.